Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. Very good morning. I hope that you all have a wonderful and restful weekend. Today will be Monday, the 15th of September 2025. So before we kickstart today's Daily Dose, which is the start of a brand new week, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into today's full suite of intraday technical analysis on those broad-based cross-asset classes that we cover on a frequent basis, which is the 4 major US dollar pair, the 6 major stock indices, and as well as the 2 key commodities market, which is gold XAU/US USD and the West Texas crude oil. Let's have a recap what has taken shape on Friday over the weekend, and as well as in today's early Asia session before the start of our daily dose at 11 a.m. Singapore time, in terms of the key economic data release events and their respective impact on the intraday movement of the broad-based cross-asset classes. So let's start with last Friday. So last Friday, we do have a tier 1 economic data release on the US economy, which is the preliminary or the flash University of Michigan consumer sentiment data for the month of September. So why this data is important? Because it's considered as a leading economic data to gauge the health of retail spending / consumer spending in the US, which is part of the services activities that constitute close to 3/4 of US GDP growth. So the flash University of Michigan consumer sentiment data actually slight more than expected. That means it came in worse than expected. So market participants or market forecast is looking at only a slight decline to 58 from 58.2 in the previous print of August. For the flash September print, it actually came in way below expectation at 55.4. And this 55.4 is the lowest since May this year, and it's also the second consecutive monthly decrease, all right, pushing the sentiment down towards a lowest level since May. So what I could see that is inching downwards, and it's now coming to this year low print of 52.2 and 52.2 in April and May. So this print actually is caused by that uncertainty surrounding that announcement of that Liberation Day global tariffs announcement by the US White House. So if you look at the longer term trend of this University of Michigan consumer sentiment, it's been inching downwards, printing a series of lower high. All right, over here. So due to this fear of lackluster consumer spending or retail spending going forward, given the fact that the Michigan consumer sentiment is a leading economic indicator of the US, one of the leading US economic indicator that actually saw profit taking in the major US stock indices. Still recall that on Thursday, the major US stock indices has a stellar return on Thursday, especially on the Dow Jones Industrial Average and the Russell 2000. So what I could see is that the profit taking took shape in the major US stock indices on Friday, where the SPX closed almost unchanged at negative 0.15%, and the Dow Jones slipped by negative 0.6%, followed by the Russell 2000 down negative 0.1%. So this we recall on Friday, I do actually highlight that do be cautious on the Dow Jones Industrial Average, which is the US Wall Street 30, which is due for a minor pullback, and that minor pullback indeed taking shape on last Friday. So with that, I'll share with you what is the latest technical intraday outlook and the key levels to watch on the US Wall Street 30 in a while time. All right, because it pulled back right exactly towards our pivotal support zone. And what's interesting over here is that the Nasdaq rallied as expected, positive 0.4%. So the Nasdaq managed to actually outperform its peers on last Friday, supported by the strong showing in this mega cap technology stocks, all right, where Microsoft, gained 1.8% on Friday, Apple 1.8%, followed by Tesla up by positive 7%, which is the market, which is the leader among the 7 mega cap stocks that has a significant weightage on the Nasdaq 100 and the SPX 500 over here. And also we have models showing in Alphabet positive 0.25%, Metal 0.6%, and the AI juggernaut up by 0.4% over here. And also because the on Friday we also see a bit of pause in that US dollar weakness. So if you look at the US dollar weakness on Friday, it actually took a pause over here. So the US dollar index managed to stage a bounce of 0.12% on Friday. But however, if you look at the price section of the US dollar index, it still continues to remain weak below the 20-day and the 50-day moving average, as it continues to trade in a series of lower high over here. And right now is attempting to actually challenge this key 97.3 support level. This is a major support level right ahead of today's key risk event, which is the US Federal Reserve monetary policy decision. Later I'll touch more about that. But most importantly is the release of the latest dot plot. That means this latest dot plot will actually showcase what are the forecasts of US Federal Reserve officials in terms of economic growth, inflation trend in the US, and most importantly, what will be the Fed funds rate will be in this next year and the year after. All right, so market participants is actually looking very closely on that. And so most importantly, Fed Chair Powell press conference thereafter. And why this 97.3 is very important, like I mentioned earlier in my previous daily dose, if you switch to the monthly chart of the US dollar index, this 97.3 is in fact the lower boundary of this long-term circular ascending channel that has been in place since May 2011 low. So if you start to see a very clear bearish breakdown below 97.3, especially a monthly close below it, where it managed to survive in the previous month of July and August, that will actually potentially trigger a major downtrend phase of the US dollar. All right, so very important. In fact, this could be a pivotal week for the FX market. So despite the fact that the dollar managed to bounce slightly on Monday, the Fed Funds futures traders, as compiled by the CME Fed Watch 2, still assigning 100% chance that the Fed will do a 25 basis point cut on this coming 17th of September, all right, which is this week. Early Singapore time will be on Thursday at 2 a.m. Singapore time, all right. So a small chance that they will have a 50 basis point cut, that's only 3%, all right, or 4%, to bring it down to 3.75% to 4%. And in my opinion, I do not support a 50 basis point cut as well on this coming Wednesday FOMC meeting. Why? Because firstly, inflationary trend in the US are still sticky on the upside based on last week's CPI data release, which is at hopefully about 3%, way above that 2% desired target the Fed wants. And also by cutting 50 basis points, it also could create a scare, unnecessary scare to the financial markets, especially the US stock markets, indicating that the US economic condition is worse than expected. So that's why the Fed cut a 50 basis point cut. So to my opinion, I do not think the Fed will do a 50 basis point cut, but they will do a 25 basis point cut, and the focus will be on the dot plot. All right. So right now, based on the aggregated probability, where the Fed funds futures traders assign probability to future month ahead Federal Reserve monetary policy decision meeting, that they continue to see 2 consecutive cut after 17th of September. That means a high chance of more than 60%, 85 basis point cut, 85 basis point chance of another 25 basis point cut on the 29th of October meeting to bring it down to 3.75% to 4%, and a 78% chance to bring it down by another 25 basis point cut on the last meeting of 2025 on 10th of December to bring it down to 3.5% to 3.75%. So right now, the Fed Funds futures trader is assigning 3 interest rate cut starting from 17th of September this year, and also another 3 interest rate cut in next year, to bring down the Fed funds rate to 2.75% to 3%. So these three potential interest rate cut in next year is very important. This may change to much more dovish. That means it may be more than 3 interest rate cut next year if the dot plot on the latest dot plot to be released together with the 17th of September FOMC monetary policy meeting starts to skew towards more on the dovish side. So later we touch more about that as we go closer to the FOMC meeting this coming early Thursday Singapore time at 2 a.m. All right. So that also potentially look at, and if you look at the 5-day rolling performance of the US dollar. All right, so the 5-day rolling performance of the US dollar also continues to be on the weaker side. So the weakest currency so far against the dollar is the weakest against the Aussie dollar, which is the dollar is down by negative 0.9%. So later I'll share with you the Aussie dollar is also as a very important juncture. It could potentially do a major bullish breakout above a key resistance level. So later I'll touch on more about that when I cover the intraday outlook on the Aussie dollar. So for now, the 5-day rolling performance on the dollar is rather lackluster, and the dollar is the weakest against the Aussie dollar, which is down by negative 0.9%. So in today's early Asia session, that also drive down the weakness of the dollar against the Aussie is due to a slew of economic data released out from China. So what's interesting over here is that we start to see the housing price index, yes, is still in negative territory, but the rate of decline has started to slow down over the last 4 months. So for the month of August, the year-on-year change in the house price index came in at negative 2.5%, below the rate of decline has started to slow down previously of negative 2.8%, and also came in better than expected by trading economics forecast, which is at negative 2.6%. So if you look at the trend of the housing price index in China, all right, okay, it starts to slow down since November, since the start of this year. The rate of decline has indeed starts to slow down. So if you look at the 10-year trend, it starts to show signs of recovery. Yes, it's still in negative territory, but the negative momentum has started to slow down, which means, i.e., the risk of a deflationary spiral in China has also reduced as well, given the fact that the housing market in China is the crux of that deflationary risk spiral that everyone has started to fear that has taken shape since post-COVID. All right, so that also act as a positive catalyst to the Aussie dollar strength that we see in today's Asia session. So despite the fact that the industrial production and the retail sales came in below expectation, so industrial production growth slowed down from 5.7 printed in the previous month of July. It slowed down to 5.2% year-on-year in August and came in below expectation of 5.8%. Similar for retail sales as well. It also came in below expectation, 3.4% from 3.8%. What market forecast is being forecasted, and also slightly below 3.7% year-on-year print in the previous month of July. So despite the lackluster industrial sales and retail sales figure, market is choosing to ignore that and choose to ignore the housing price index, which the magnitude of decline came in lesser. All right, and also market also choose to focus of this ongoing fourth round of US China trade talks that is now taking place in Spain. All right, so it kickstarted on Sunday yesterday, and today will be the second day. So yesterday, what Trump also mentioned something on late Sunday. Okay, where did it mention over here? Okay, I think there is something that, okay, yeah. Trump told reporters later on Sunday that the talks are going fine. So this boosts a bit of what I call optimism. So this talks itself is actually potentially could actually discuss the current trade situation between US and China, where the trade tariffs, the higher trade tariffs has been put on pause, and the deadline has been further extended to 10th of November this year. And ahead of 10th of November, this particular ongoing talks that is taking shape in Spain between Chinese and US officials is also potentially warming up to a physical meetup between Trump and a Xi summit. All right, so that could potentially take place in October next month. which is meet up in the Korea APEC summit. So these two, the both side officials also trying to get these two officials talking physically. So if that would be a potential, we call it cementation or confirmation of this Trump and Xi meet up in October during the Korea and OPEC summit, that could also be very positive to the financial markets as well, especially on the China related risk asset, which is the Hong Kong stock indices and the China stock indices, and particularly the Aussie dollar, which is very sensitive to the growth potential of the Chinese economy over here. And this trade talk over here will last until Wednesday, given the fact that the China Ministry of Commerce has said that its delegation will be in Spain from 14 to 17 of September. So ideally, these trade talks between US trade official that is led by the US Secretary Scott Bessent, that could potentially last until this coming Wednesday. So between now and Wednesday, do look out for potential news flow coming out from this US China important trade talks negotiation. Right. So how does it impact the Asia Pacific stock indices? So if you look at the Asia Pacific stock indices, the Nikkei 225 is closed for today for a public holiday. So if you look at the Hong Kong index continues to be rather bullish. So the Hang Seng index is up by 0.4%, and the higher beta Hang Seng Tech index is up by 1.2%. And followed by the H shares, which is the China shares listed on the Hong Kong Stock Exchange. The benchmark stock index that measures that, HSCI, is up by 0.4%, and the China CSI 300 benchmark A shares component stocks, which comprises the stocks of both the Shenzhen Stock Exchange and the Shanghai Stock Exchange, is up by 0.8% due to the optimism of Trump mentioning yesterday that the ongoing US-China trade talks in Spain right now is potentially doing fine, and also market is now focusing on the risk of a lower risk of a deflationary spiral in China due to that lesser magnitude of decline in the housing price index that I shared with you guys earlier on. Other Asia Pacific stock market also continues to bask in the bullish limelight. The Kospi 200 is up by 0.66%, which is the Korea stock exchange, Korea benchmark stock index. The STI almost unchanged today. All right, and the AXX 200 is down slightly by negative 0.24%. All right, so that covers the first segment of today's daily dose over here. So let me move on to the second segment, which is the intraday technical outlook segment. All right, so with that, let me expand my screen. Okay, so that you guys can have a better view of the chart. All right, so excuse me. So let us now very quickly start with the euro dollar. So the euro dollar continues to trade above this minor ascending channel from the low of 1st of August, highlighted in turquoise green, and also continue to trade above the 20 and the 50-day moving average, holding above our pivotal support that we highlighted in our previous daily dose at 1.1675. So no change, still maintain that bullish bias, using 1.1675 as my short-term pivotal support level. First resistance level to watch will be the minor swing high area of 9th of September at 117.70/117.90. We also confluence with the minor swing high of 24th of July. Only a bullish breakout above 117.90 will allow the bulls to gain more traction to retest the 1st of July 2025 swing high, and as well as its current 52-week its current 52-week high at 1.1830. And so right now the hourly RSI also has started to slope upwards above the 50 level mark, indicating that some form of short-term bullish momentum has started to creep back into the euro dollar. Only a bearish breakdown below 116.75 will invalidate today's intraday bullish bias on the euro dollar to expose the next near-term support level at 116.17, which is the minor swing low of 2nd of September and 3rd of September. Very quickly, next up will be the sterling dollar. So the sterling dollar also continues to trade above the 20-day moving average, which is my first support at 135 figure level. So still no change given that it hasn't broken out above our first resistance level, which is at 135.90/136.10, almost retested on a Thursday session and also on Friday US session as well, where it printed a high of 135.75. So unless we have a bullish breakout in the European session today at 136.10, that I will tighten my pivotal support to 135 figure level. So still no change, still use the previous pivotal support at 134.50 on the sterling dollar, maintain that bullish bias for the next resistance to come in after 136.10, which is 136.50, 136.80, which is the congestion area of 27th of July and 4th of July this year in the first step on the intraday basis. However, a bearish breakdown below 134.50 will invalidate today's bearish bias view. It will invalidate today's bullish bias view. So today we still have a bullish bias. So repeat again, 134.50 to maintain that bullish bias on the sterling dollar. Unless we have a bearish breakdown below 134.50, the bullish bias view will be invalidated to see another round of minor corrective decline sequence unfolding towards the next near-term support level at 133.95/133.50, which is all confluence with the medium-term ascending trend line from the low of 13th of January 2025 and the minor swing low area of 2nd of September and 3rd of September. Very quickly will be the Aussie dollar over here. So the Aussie dollar, like I mentioned, if you look at the daily time frame chart, is now pushing up. If the 4-hour time frame chart is now pushing up higher, heading towards the 67 figure level, which is also very closely the long-term circular descending trend line from 25th of September 2021 high, and as well as the upper limit of this expanding wedge range configuration since April 2025 low over here, which is 24th of April 2025 low. So very quickly, let's go down to the 1-hour time frame chart to highlight to you guys what are the key short-term intraday levels to watch. So on last Friday, I highlighted Aussie dollar as my chart of the day. So level still remains the same. As we could see, the Aussie dollar managed to bounce off right exactly at our first support level at 66.35, which is highlighted, which is also the lower boundary of this much more steeper minor ascending channel that is still in place since 5th of September 2025 look. All right, over here. So give me a minute, let me expand. All right, so given the fact that the hourly RSI now also has starts to shape a series of higher low as we are speaking, right above the 50 level, indicating that short-term bullish momentum remains intact. So still no change, still using my pivotal support. So my apologies, last Friday there's a typo error. It should be 66.20. So 66.20 will be my short-term pivotal support on the Aussie dollar. Still maintain that level, still maintain that bullish bias view heading towards, in first step, the major resistance zone or major resistance level at 66.80/67 figure level for today. All right, so that will be the intraday outlook for the Aussie dollar. Unless for today we start to see a very strong bullish breakout above 67 figure, which is very unlikely given the fact that there's no relevant news flow or economic data release that will be taking shape in today's European session and US session. So for now, first intermediate resistance level to watch will be 66.80/67 figure level. However, if we start to see a bearish breakdown below 66.20, today intraday bullish bias will be invalidated to see a much more deeper minor corrective decline sequence unfolding on the Aussie dollar to invalidate today's bullish bias to expose the next near-term support level at 65.80/65.55, which is the minor ascending channel of the previous one that is being drawn from the 22nd of August 2025. All right. So that's for the Aussie dollar. Next up will be the dollar yen. All right, so the dollar yen managed to stage a bearish rejection of our first resistance level that we highlighted previously at 147.95. So given that it still continues to remain choppy in a sideways range configuration, so it's more like a sideways range configuration within a medium-term sideways range configuration. So the minor sideways range configuration is starting from 5th of August this year. All right, it's been in a choppy sideways range configuration, and if we go to the higher time frame, the daily time frame is in a medium-term ascending wedge range configuration that has taken shape since the low of 22nd of April. this year. So given the fact that it's rather very choppy, I do not want to tighten my pivotal resistance to be at 147.95. So I leave it at 14875/95, which is a very important resistance zone as well, which is the minor swing high of 3rd of September that got rejected right where the bulls got rejected right exactly at this downward sloping 200-day moving average over here. So first support level to watch out for today on the intraday basis will be 147.05, which was last Thursday minor swing low. So a breakdown below 147.05 potentially expose the minor range support area of 14670, 14640 again. Only a bullish breakout above 14875/95 will see a squeeze up to retest the medium term pivotal resistance area at 14970, 14990. All right, so that sum up the intraday technical outlook on all the 4 major US dollar pair. Let's now quickly go to the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 continues to bounce off as expected in our previous short-term pivotal tighten support that I highlighted previously at 26,200. The hourly RSI continues to shape a higher low above the 50 level mark, hasn't hit the overbought level yet, so indicating that the short-term bullish momentum still remains intact. So for now, it now managed to test out my first resistance level at 26,530. So there is no clear signs of a bullish exhaustion. So still continues to maintain that bullish bias on the Hong Kong 33 that is representing the Hang Seng Index using 26,200 as my short-term pivotal support level. Next resistance level to watch after 26,530 on the intraday basis will be 26,740, 26,790. Only a bearish breakdown below 26,200 will invalidate today's bullish bias view on the Hong Kong 33 to see another round of minor corrective decline sequence unfolding, retesting last Wednesday minor swing low area at 25,860. We're so confident with the former 4 weeks of range resistance that has been taking shape since early August this year that did a bullish breakout on last Tuesday, which is now at a pullback support at 25,860. Next up will be the Japan 225 that representing the Nikkei 225. Still, I recall that today the Japan stock market is closed for a public holiday, so do expect a lackluster sideways movement on the Japan 225. So for no change, on last Friday, it hit exactly at our first resistance level at 44,840/970. So given the fact that today there is no trading on the Japan Stock Exchange, so I do not want to tighten my short-term pivotal support to be so tight. So still maintain at 44,050. That's my short-term pivotal support level. Maintain the ongoing bullish biasness on the Japan 225. Next resistance level to watch will be at 45,460, which is very close to the upper limit of this ongoing minor ascending channel that is still in place since the low of 1st of August 2025 and a 2.0 Fibo extension level taken from the low of 1st of September. However, a bearish breakdown below 44,050 will negate the bullish bias of the Japan 225 to see a corrective decline unfolding, exposing the next near-term support level at 43,480 next. Okay, so that's for the Japan 225. Next up will be the Germany 30 CFD index, which is representing the German DAX. So it continues to trade in this sideways range within our neutrality zone of 23,900 and 23,490 for the entire of last week. So still maintain that neutrality stance on the Germany 30, neutral between 23,900 and 23,490. Next up will be the major US stock indices, starting with the US Wall Street 30. So like I mentioned, the first resistance level that was at 46,060, 46,180 that has been met on last Thursday and Friday. I do warn about that pullback, and that pullback take shape and managed to store right exactly at our Titan short-term pivotal support zone, which is that former minor bullish ascending triangle range. Bullish breakout now turns into a critical near-term pullback support area. at 45,780/690. So given that it's now right exactly at this pivotal support level, and the hourly RSI also now managed to retest its ascending trendline support level as well, that I drew over here. So given the fact that today there could be a minor bullish reversal taking shape on the US Wall Street 30 index, CFD index, which represents the Dow Jones Industrial Average. So no change, still maintain that bullish bias using 45,780, 45,690 as my short-term pivotal support zone. First resistance to watch for sure will be at 46,060, 46,180 for today. However, a bearish breakdown below 45,690 will invalidate today's bullish bias to see a deeper minor corrective decline unfolding, heading towards the 200-day, heading towards the upward sloping 20-day moving average, pardon me, with also confluence with the minor swing low area of 10 of September last week at 45,425. Next up will be the S&P 500. So the S&P 500 did much better in terms of the price action because of its heavily concentrated mega cap component stocks that managed to fare better on last Friday. So with that, it hit up my first resistance level at 6,590 and start to trade sideways. So with that, I will tighten my short-term pivotal support area or support level to the former minor swing high of 10 of September at 6,550. So using a tighten adjusted short-term pivotal support on the SPX 500, 6,550, still maintain that bullish bias view. Next resistance level to watch will be at 6,620, 6,630, which is a Fibo extension cluster level. Only a bearish breakdown below 6,550 will negate today's bullish bias view to see a deeper minor corrective decline sequence unfolding to retest the last Friday swing low area at 6,520, which was the former minor swing high of the previous Friday, turns into a pullback support level at 6,520. Next up will be the Nasdaq 100. So the Nasdaq 100 also continues to shape a higher high and broke above our first resistance level that we highlighted on last Thursday, pardon me, at 24,050. All right, so this will be my first pullback support level to watch. All right, so using a Titan short-term pivotal support level for today at 23,930, maintain that bullish bias on the Nasdaq 100. Next resistance level to watch for today will be at 24,233/24,270 to 24,233, 24,274, which is a Fibo extension cluster level. Above it exposes 24,390, which is 24,360, pardon me, 24,360. That is the one-time Fibo extension taken from the low of 2nd of September. Only a bearish breakdown below 23,930 Titan short-term pivotal support for today will negate the bullish tone to see a deeper minor corrective decline sequence unfolding to retest last Friday and as well as last Tuesday minor swing low area at 23,755. All right, so that sum up the major stock indices intraday technical outlook. Very quickly, let us now focus on the commodities market, starting with gold XAU/USD. So no change for gold XAU/USD as it continues to trade in a sideways fashion, with the hourly RSI bouncing up from a parallel horizontal support level and now back above the 50 level mark again, indicating that short-term bullish momentum still remains intact. On last Thursday and last Friday, it managed to survive at our first support level at 3,620, slightly above our pivotal support level, which is 3,600, which is a key psychological level as well. Still no change, still maintain that bullish bias on gold XAU/USD for today, using 3,600 as my short-term pivotal support level. First resistance level to watch will be the current all-time high area at 3,665, 3,670. A breakout above it exposes 3,686, 3,687 next, which is a Fibo extension cluster level as well. All right, which is defined by Fibo extension cluster level. 3,687, not 6. I'm a bit of tongue twisting, pardon me. Only a bearish breakdown below 3,600 will invalidate today's intraday bullish bias view to see a deeper minor corrective decline sequence unfolding, exposing the next near-term support level at 3,561 and even 3,536. Okay, which is the if we do the FIBO retracement of this entire minor impulsive bullish up move that has taken shape since 20th of August this year low, that constitute very closely with the 38.2% FIBO retracement. Okay, for the 33,536 level. Okay, so that's for gold XAU/USD. Very quickly, the West Texas crude oil. So the West Texas crude oil remains below our pivotal resistance that we highlighted earlier on my previous daily dose, which is also the 20-day moving average that got rejected on Thursday, on Wednesday, pardon me, and also got rejected again on Friday, all right, which is 6510/60, which is 6410, pardon me, /6436, okay, 64.36. So this is a very important pivotal resistance level that got rejected on Friday. And after that, on Friday, on today's Asia session, it did a minor bounce over here. So what causes this minor bounce that led to an intraday rally of 0.7% is due to over on Sunday, Trump actually made a remark, tried to actually force Russia back to the negotiation table for peace talks between Russia and Ukraine, stating that right now he said he's prepared to move ahead with major sanctions on Russia oil if NATO countries do the same. All right, so that could actually reduce, we call it global oil supply if sanctions were being imposed on Russian oil. But do not forget, over here is that we also have this ongoing external demand weakness coming up from US, where we start to see lackluster demand related economic data out from the US, especially on last Friday, University of Michigan flash data for September that came in weaker than expected, and also the ongoing OPEC plus continuation of a production hike, not production cut. So that actually causes the bulls to be a bit cautious once it hit towards the 64.10, 64.36 resistance level. So still maintain that bearish bias over here using 64.10/64.36 as my short-term pivotal resistance level in this minor sideway range configuration that has taken shape since the low of 5th of September. First support level to watch will be on today's Asia session low at 62.74. A breakdown below 62.74 exposes the minor range support level at 61.85. Only a bullish breakout above 64.36 will invalidate today's bearish bias stance within this minor sideway range configuration to see a squeeze up towards 65 figure level and even 66 figure level, which confluence very closely to the 50-day moving average. All right, so that sum up the today's intraday technical outlook on all the major cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for today? All right, so today will be a rather quiet day. So in terms of economic data during the European session, will be none other than at 7:30 p.m. We will there's the ECB official speaking. ECB Chanel will be speaking at 7:30 p.m. That may influence the euro dollar, the euro crosses rate over here. And nonetheless, it will be a very quiet US session as well. Then at 2:10 a.m. Singapore time, early tomorrow, Tuesday, we have ECB President Lagarde speaking. And thereafter will be a rather quiet session, followed by at the start of Tuesday, early Asia session, 16th of September will be 7:50 a.m. RBA Deputy Governor Hunter will be speaking. That could influence the Aussie dollar and the Aussie crosses rate. And so nevertheless, do keep a lookout for any news flow pertaining to this ongoing US-China key trade negotiation talks that is taking shape in Spain. Kickstarting today will be the second day, and it will potentially last until Wednesday. All right, so with that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.